Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 22nd of July. Starting off with the FTSE 100, which is very near to the top of that green rising trend channel from the spring of last year. We were looking for 90.30 by the end of this month, and then 90.40, and now obviously 90.50 as the line gradually increases. But so far, we've managed to get up to 90.25, so basically quite happy with how everything has gone. Floor of the red channel there, the accelerated channel from May around the 89.15 level. So above that, still looking for a breakthrough the top of the green channel, 90.50, and then a move up to as high as 92.20 by the end of next month, which is the May resistance line projection. RSI still just under 66, which is relatively modest. So decent consolidation here, which has been at and above the old June resistance. So a strong setup still. We do have a rug pull from tariffs or nuclear war or some other disaster, then 88.13 in the 50-day line, potential rug pull level, but we haven't been back below the 50-day line since basically the beginning of May, so very, very strong market here. A bit like the January, I suppose, to March period for the market, that kind of thing. Moving along to the DAX, and here has been a steady picture, but obviously I'll see if we can stay above that 50-day line there at 23,900. If we can, we're still looking for the 25,000 level to be hit by the end of this month, 25,100 now. RSI still above neutral 50, so still waiting for that maybe one or two big days to the upside to revive this market. But anything above the old March resistance, 23,500, I suppose, is a win given the current macro situation. Moving on to the Dow, and here the previous, the ongoing range between 43 and or between 44 and 45,000 continues. We're in this flag formation. The top of the flag is basically yesterday's resistance, 44,600. So we want to see an end of day close above that to then give us the possibility of hitting the top of that rising trend channel from back in May last year up to 47,300, or actually 47,500 is a best case scenario target. If you're fussy, I suppose you could say that the level is up to 46,800, but 47,000 area, the target for this market, perhaps as soon as the end of next month, while we remain above recent support at 44,000. RSI at 59, so in a good place for potential move to the upside. But probably the best thing here is to wait for an end of day close above that July resistance line at 44,600. On to Bitcoin, and here we've got a situation where we have been probing for support and doing it in a decent way. At 115, basically the low since we broke to new highs, and also the floor of that red rising trend channel. So we are above that. Still waiting for a move to the top of the overall channel there from last year, 127,000 now the target. Hoping we might get that by the end of this month, although that might be pushing it now. And looking for an acceleration to the upside, 140 plus, over the course of August, September, if we can get a quick move through 127. On the downside, the worst case at the moment is probably the old May high, 112,000. Moving along to Ethereum, which has been promoted, and it seems to be the sort of a new market to look at. Here we've got pullback from the best levels, a bit of a bull trap through the old January resistance, 37.50. Want to see an end of day close back above that to give us a target towards 42.60 and the upper parallel of that rising trend channel from March this year. Support hopefully will come in towards 34.80. Which was the old target, the top of that channel, if we do have an ongoing pullback. Moving on to gold, and here the position is that we've got this market trying to make a good attempt, actually, at giving a new leg to the upside. We've had the consolidation for 3 months now, which has been slightly boring, but 34.30 the level to break. End of day close above that, we could be looking at 3,800 by the end of next month. Bounces, a couple of bounces there, quite a few bounces near the RSI 50 level. So that does suggest that we are ready for a new leg to the upside. And the 50-day line and 200-day lines both rising. Worst case at the moment is that we head back down to the floor of the channel there, 3,300, but it looks as though we are now finally safe. Touch wood. Moving on to the stocks, and it looks like Blencowe finally getting a bit of love, proper love here. We've effectively got Bear Trap Island reversal, so gapping down to new lows in April, May, and then gapping up the end of last month. A nice sideways breakout, sideways shuffle breakout. So vertical move with a gap and looking for a minimum at 4.75 pence, which is the top of the November triangle. Above that, looking for as high as 6 pence by the end of next month. Ideally, we stay above the 200-day line at 3.75, whatever happens to the stock. On to B90, which has broken through its 200-day line for the first time since November. I don't think anybody really looks at this stock, but always nice to have something obscure above the 200-day moving average at 2.9 pence. Looking for the market or the stock to get up to 5 pence plus by the end of next month. Good bullish divergence there as well. So lower lows for May, June, but a higher RSI trace. So looks as though somebody's on the case there. Onto Capex, which looks as though it's finally delivering on its potential. Here you can see that we've gapped up with a V-shaped bull flag breakout through 0.31. An end-of-day close above that, we're looking at 0.45 by the end of next month. In fact, even if we don't get an end-of-day close quickly, at least while we're above the floor of the latest gap, 0.26, still looking for 0.45. RSI 50 rebound as well, ahead of yesterday's gap to the upside. Moving along to Catenai, where we've been trying to work out where the shares will rebound. The favored target now, after missing various potential support points, is the 200-day line, which looks credible. We had a decent price action yesterday, opening at the low, closing at the high, and we're maintaining that 200-day moving average around 0.25. Above that, the initial target here, the 50-day line, 0.36. RSI remaining steady, even though we've gone low, so there is a bullish divergence case there for this market. On to Futura, and here the shares spiked up earlier in the month, hit the top of that rising trend channel base at basically 15 pence. We've gapped up yesterday, in fact, and also back at the end of last week. So looking for at least 15.5 pence over the next few days. Best case up to 19 or 20 pence by the end of next month, which is the floor of that big gap down that we had back in January. Ideally, we stay on the right side of 10 pence, whatever happens. Next on the list is first-class metals, and here shares finding support above a rising 50-day line, which is normally encouraging. That's at around 1.96 above that. Looking for a retest of 3.5 pence by the end of next month, which is which is also the top of the triangle there from back in October. The other point to note is that the RSI has remained above neutral 50 since the beginning of last month, which is a good look at the moment, as is the sideways action there that we have for the shares. On to a stock which has come out of nowhere, or spiked out of nowhere after an extended decline. Then it's Genflow. Maybe they've found the cure for aging. Here you can see that we've had bounce after a new low, quite a decent bounce there back above the 50-day line, which is around 0.8. If we can maintain that, we're looking for up to 1.15 by the end of next month, on the basis that we actually do have bullish divergence here, so lower lows for July, but a higher RSI trace, by quite much higher RSI trace ahead of today's move. But probably want to see a few end-of-day closes back above that 50-day line to get a bit of confidence back in the stock. Gfinity is next, and here we've got a bounce off the floor of the rising trend channel and above a rising 50-day moving average. We broke the line from February around 0.08 a couple of weeks ago, and the longer we stay above that, the greater the chance of perhaps a rather unbelievable move up to 0.15 by the end of next month or going into September. On to Hammock, which basically been hitting the top of our range on that. We had the upper parallel of that rising trend channel, and I suppose we can add another one to the list as well. So looking for up to 6.5 pence, but only while we remain above the recent support there around the 4.25 level. So let's see if the shares can maintain that. Looks as though we're a little bit overstretched in the near term, but above 4, it's got the best case scenario target up to 6.5 on Hammock. On to another stock which was called higher here, where everyone else is claiming the credit, and it is Harena. And here you can see that we broke the falling wedge there around 1.1 pence. We then broke the 50-day line at 1.25, and above that we've been looking for up to 2.1 pence on the basis that rare earths are now the new rock and roll. And the gap higher today, very impressive as well. In fact, the gap higher yesterday, very impressive as well. Moving along to Hemogenyx, which is, I suppose, is another stock, which is a bit of a surprise inclusion today. Here you can see the shares up 15%, and I suppose given the company's addiction to fundraising, if we don't have one, then maybe we could actually get some decent upside here. Already had a gap, bear trap island reversal, so gapping down in June and gapping up this week. Minimum on the upside here, 175 pence, which is the top of that falling channel. Best case would be up to the line I'm about to draw at the moment, which is heading for the 208 pence level. So that would be the top of a broadening triangle from back in April, and looking for that to be hit by the end of next month or even sooner. What would be nice today is that we have an end of day close above that 50-day line, but a very good setup there for a change, almost unbelievable given the history of the company. Upside value while we hold above yesterday's peak, which was around the 150 pence level. Moving on to the last three. The first one is Solvonis, which had a decent RNS today. Here you can see that despite the recent the decent RNS, we've gone back to our old target there, 0.29. Want to see the shares remain above 0.29 and then head up towards 0.45, which is or was resistance on the way down back in this time last year. RSI still above neutral 50 at 56, so just about hanging on in there. And ideally, as I said, we'd like to stay above 0.29 in that old target line. Moving on to surface transforms, which you might think today's RNS was a surprise, but the chart was already looking decent, as you can see from the old lines there. The initial target there at 0.6, and above that we'll be looking for 1.8 pence. And hopefully we can get that by the end of next month after a bit of settling down for the shares. Current situations, we'd like to see the shares remain above today's 1.13 low and the old June peak at that level on an end of day close basis ahead of a move towards 1.8 pence and presumably beyond that. Finishing off with tissue Regenix, and here you can see that we've got a broadening triangle base. We've broken out of that falling trend channel there and broken through the now rising 50-day line above that at 30.5 pence, looking for an easy 45 pence by the end of next month. So let's see if that tempting of fate will ruin it or not. We've got an uptrend line in the RSI window as well, so lower lows for July, but higher RSI trace, so that is a win. As is the way that we're on our third day in a row where the shares have opened at the low, close at the high. So somebody quite keen on buying that stock, it would appear. That's it for me today. More updates tomorrow.